Hi there, welcome to Neppy Invest. Exciting video I have for you today. Well, I hope you think it's exciting. So what I'm going to do today in this video is go through the holdings I have within my long-term growth portfolio. So what I'm doing now is managing two portfolios that I run. This is just personal portfolios. This is nothing, these aren't portfolios you can join up to, but this is just personal portfolios. Just got to mention that. So don't come to me and asking how you can put your money into these portfolios. But anyway, so I have two portfolios. One of them is the sentiment momentum portfolio, and I'm doing some videos on that. So you just have a look at that and you can see what that's all about. And my other portfolio is the long-term growth portfolio. So in this video, I'm going to just go through the holdings of all of my holdings of that portfolio. In fact, I have at this point in time 35 holdings, and there is a reason why I have so many holdings within this portfolio. So let's get into the first slide, which talks about what this portfolio is, this strategy is. So all it comes down to is these are companies that I think have long-term potential, and what that means is in 5, 10, 20 years or so, I think the value of the company is going to be significantly higher than it is today. Now, they're not all going to be significantly higher. In fact, the success rate I'm looking for is between 60 and 70%. So that means 30 to 40% of the companies that I am holding right now more than likely won't succeed, won't be successful. But you can see when I show you the performance of my portfolio over the last few years, you can see that the success stories far outweigh the negative, the bad stories, because if you don't know this, the gains you can make with your best investments are significantly higher than the losses you make with your worst investments. That is absolutely true, and I'll show you that when I get to the performance of my portfolio. So anyway, so I'm buying off potential. Now, potential for a lot of these companies, potential is I think they're going to grow at a good rate over the next decade or so. So ideally, I like to hold these companies for as long as possible, decades, 20, 30 years, maybe not centuries, because I won't be able to have any benefits of any company that grows for a few centuries. I'm not going to have any ancestors that will take benefits of that either. I want to take benefits of the increase in success of these companies. So I'm looking at a 20-year line, 20, 30 years down the line. I'm hoping at least one of these companies are continuing to hold in 20 or 30 years. That means more than likely that company is significantly higher valued, by 1,000 times potentially. I largely ignore technicals, so my sentiment portfolio, I largely use technicals. I also use financials, but that's my technical portfolio. This is just buying off potential, looking at long-term growth, that sort of thing. And I think it's very important to have a sell strategy. Whenever you buy into a company, as soon as you buy a company, you should have a sell strategy for that company. So the main sell strategy for holdings within my long-term growth portfolio is when the story changes. We can see the story adjusts slightly or largely, and that's not a reason to sell. And a good example of that is A2 Milk. Now, A2 Milk story has adjusted over the last, say, 3 or 4 months. They've done some things I haven't liked, and I think the growth story has decreased a little bit, but it's just an adjustment of the story. It hasn't changed significantly enough for me to sell at the moment. That could change in the next few months if the adjustment in the story becomes more of a change, a significant change. So more of a leeway when it comes to selling in this strategy. In my momentum sentiment portfolio, my selling strategy is very strict. I have rules when I sell, and I follow those rules 100%. There's no leeway at all when I sell in that portfolio or that strategy. So what are some of the holdings I have within this portfolio? Big Tin Can. So this is another company where I've lost a little bit of faith in, but I think they're going to have a rip snorter of a quarterly for the current quarter. So I'm looking forward to later in January when they release that quarterly. SciDev, the first video I did in investing YouTube was on SciDev. I love this company. You should not fall in love with any companies you own, but I do like this company a lot. And I think they have lots of room for growth in the future. Ava Risk Group, another company I would say I love, but you should not love any companies you hold. It's a significant grower for me. I bought in at 14.5 cents and then up to 70 cents. And when I bought them the last time, that was in May. So in the last 7 months, they've gone up almost 4 times in share price. Electro Optical, I just like this company because of the space they're in. So they're in defense and they're also in space and communications. So the space area or the space sector is the area I really like. I really like the fact that Australia has moved into the space sector, become a space player. And apparently Electro Optical is probably, I think, the largest space company in the Southern Hemisphere. Alexium, if you've been following my videos, you know why I like Alexium. It has to do with one of their technologies they've developed, which is called Phonon, and it has to do with perpetual cooling. The fact that I could potentially wear a shirt in the future that will keep me cool when I run, and the harder I run and the warmer I get, the harder the t-shirt will work to keep me cool. I love that potential, and just the fact that Alexium have created this technology makes me like this company and want to buy them. That's why I bought into Alexium. It's actually not the only reason. I actually bought in earlier than they had that announcement. But anyway, I use that as a justification of buying into Alexium. And of course, the last company is A2 Milk, because it's probably one of my largest, actually it is my largest holdings now, but it's probably the company where I put the most time and effort into figuring out whether I should sell or not. I've been thinking about that for 2 or 3 years. Not completely, but sell out a proportion of the holdings. I'll get into that in a minute. So now I'm going to go through all the companies that I hold, just to do a little bit of a snippet on each company. So Ava Risk Group, again, this is actually a company I actually have traded before. They were called something else, ticker code FFT, and I traded them like twice for very small profits. And then they went from $1 to like 10 cents or so. Then the share price went sideways, and now it's just going through the roof because they become profitable. Cash flow is coming through the door at great knots. The company is, say, a market darling for now, and share price just keeps on growing and growing and growing. And it's going to keep on growing until this company stops growing their cash flows, which could be for a while. Who knows? A2 Milk. So I bought this company at $2.15. I forget what year. It was 2016, I think. Share price goes as high as $20, so it's almost a 10-bagger. And 10-bagger, I've had one 10-bagger other than this, and that was an absolute disaster. Who's heard of Biggin? Yeah, so I bought Biggin at 30 cents. They went up to like $3.90. I sold out most of it in the $3, but then they were a fraud. The reason I bought into Biggin was because their cash flows were going through the roof. And you know, if you know me, you know I love cash flow growth, but it was all a fraud. And in fact, I'm going to do a video on Biggin because it's a great story about what to look for fraud. And that was a 10-bagger for me, but it was actually a disaster because they, lost, any holders lost all their money. Fortunately, I didn't lose all my money. I did take profits with that. But anyway, A2 Milk was almost my second 10-bagger. It got just short, just got to about $20. It needs to get to $21.50 for me to have this as a 10-bagger. Haven't sold any of this yet, so I've been potentially thinking of selling to cutting my the overall my overall holding, because it's a large proportion of my overall holdings, and I want that proportion to be much lower than it is now. But I've just kept on holding anyway because it keeps on growing. Well, it did anyway until the last 4 or 5 months. Big Ten Cans, another company which I've been trading. So I originally bought this just after the IPO at around 25 cents. Then I sold it at 39 cents. Bought back in at 42 cents. Then sold it at 50 cents. And then at 54.5 cents, I went, I'm just going to buy this and hold it because it kept on growing. Each time I traded it, share price kept on increasing. I just thought, why would I put myself through that? Just keep on holding. Just watch the share price go higher. And the share price has gone higher. They did a capital raising at 80 cents or 70, 80 cents. I did buy into the capital raising, and I'm just thinking potentially of selling this company. It's only a small thought at this point in time, and it's based mostly off the next quarterly results. If the next quarterly results do disappoint me, I will sell out. SciDev, yeah, so this company I bought in at 49.5 cents. They went through a really good run leading up to when I bought into them. And at the time I was thinking maybe I should just wait and see if the share price drops. And the share price never dropped. keeps on going up, and I think this has long-term potential. I think there's a great chance this company in 10 years would be a massive success story on the ASX. Appen. So Appen was another example of when I just traded too much in the company. So I bought 326 units at $9.63, and then when the share price went up, I just decided to sell 200 units of that at $19.16 and $24.41. The share price kept on going up. Why did I sell? Just because the share price had increased, and I just believe that the saying always take profits. It's not a best saying, because if you always take profits, you'll never become wealthy. So currently hold only 126 units because I sold out 200 units and have gained over 200% with Appen. Significant growth rates with Appen, 100% per annum growth rate in operating cash flow. That's phenomenal. It's one of the, if you see 100% growth rate in operating cash flow over 4 or 5 years, that should be a company you own. Spectre 3, this is a small cap company. I've done maybe 1 or 2 videos on Spectre 3. Definitely done a quarterly report video on Spectre 3, maybe the previous one. Anyway, after the last quarterly report, the market didn't like it, and I thought there was some opportunity to buy because I thought the market was overreacting. So I bought at 5.6 cents, and I didn't buy a lot, so that doesn't add up to much. So then I thought, my theory was then if the share price drops any lower, I'll buy, add to my holdings. But the share price didn't drop much from there. In fact, they had a very positive announcement a few weeks ago, and the share price popped. So it's gone from 5.6 cents to 9 cents, 61% gain. You can't be disappointed with that, but I just wished I'd put a little bit more money into it, had a little bit more conviction with my holdings with Spectre. But I thought, you probably could say I was being a little bit too smart, being too, thinking a bit too much. I just gone in, bought my allotment I wanted, and that's it. Deck Mill. So this is a mining infrastructure. Not sure if they do mining service, definitely in infrastructure. Have a lot of projects, a lot of potential revenue coming online in the next few years. I think Australia should go through an infrastructure boom if the government is real in keep providing growth to the economy. They've had a horrible, I think it was 2020, yeah, horrible 2020 Deck Mill. They went from a share price of $1 all the way down to about 5 cents. Now, you can see here, current share price is 67.5 cents. That's deceiving because I did a consolidation. I think it was a 10-for-1 consolidation, which means the share price was 6.75 cents when they did a consolidation. So essentially, the share price went from $1 all the way to 5 cents. They did the share consolidation to fool the market. But if you adjust the share price based off the consolidation, the share price 1 year ago was $10, and the share price went all the way down to 67.5 cents. Now, a lot of bad news, a lot of bad projects. I didn't really read into much of it at all. But the main thing with Deck Mill is we're seeing a change in trend. Sentiment is changing. We've definitely seen the share price starting to go up. We're seeing a lot of really good announcements, projects coming online. They've won a lot of projects, that sort of thing. So I think based off the market cap and the potential for a lot of revenue coming in the door, and it all depends on the margins of those projects they've been winning. My one concern is they've intentionally decreased the margins, lowered the margins to win those contracts, which is not a good thing. So that's my one concern. But with the market cap being fairly low sentiment within that company, I thought it was a good time to buy. And the share price has gone up since then, so that's not a bad thing. So EOS is another company I really like, but I've really overtraded this company. So I bought in allotments, just like I've done with other companies. But in this case, the share price didn't go down. The share price went up, so I've averaged up. So I bought 1,200 units at 251, 300 units at 7, and 150 units at 66. And you can see then I started to sell, and all it comes down to is I currently hold 600 units. I've been meaning to buy in another 600 units to get back to my original holding, but I've just held back because when you sell, it's really hard psychologically to buy whatever you've sold in the previous lifetime. So I found it really hard to buy back 600 units, and really $6.49 is actually a good price to buy because it's actually lower than when I've sold. So Don't know why I haven't bought any. Going back to 1,200 units, I'm very positive that the long-term future of EOS is going to be, the share price will be significantly high in the future. So I'm not sure what's holding me back. It's just that psychological barrier, which one of the things I really have to get over is when I sell out of a company or sell a portion of a company, I struggle to buy back in. Aries Resources, for those who are cricket lovers, cricket followers, especially Australian cricket team, you might know a guy called Marnus Labuschagne. So he's come on the scene in the last few years and looks the goods. Now, he was originally from South Africa. So when I started to research Aries Resources, I just saw the name of the CEO, and his last name was Labuschagne, and I just went, I wonder if he's related to Marnus. And lo and behold, he's his daddy, so his father. So Marnus's daddy is the CEO of a mining company called Aries Resources. It's not the reason I bought into this company. They bought a project, a gold mine off, I think it was Evolution Mining, which has a few years left in it, and I think they're going to become quite cash flow positive over the next few years. But I think this is a good growth potential story over the next 5 or 10 years, particularly if they start getting more projects into production. And the share price has reacted quite positively to that news. It's gone from 5.6 to 8.1 cents. So I've made 45% gain. So go Marnus Labuschagne's daddy. I think his name's Andre. So go Andre Labuschagne. You've done a very good job so far. And well done for your son. That was a good reproduction thing you did there with Australian cricket, for Australian cricket and for people who follow Australian cricket. So enough of me rambling on. Kogan, this is a really learning experience for me. So I bought a few years ago 1,750 units at $2.31, and then I kept on selling for profits. So I sold at $4, $6.90, $7.60, and $21.21. So my original holding of 1,750 units is being whittled down to 150 units. Why didn't I just keep on holding? Why? 1,750 units at $17.57 was as high as at $20, $22 or so, but $20, that's $35,000. So I've missed out on a fair bit of gain just because I was just too keen to sell for a profit. And this is another example why always take your profits is a bad saying. If I just be patient and just kept on holding, it would have been a great story. Anyway, fairly bullish on Kogan moving forward. E-commerce, that's the future. Retail, bricks and mortar retail, that's in the past. So Kogan.com. Xtech or XTE. This is a company actually averaged down. So I originally bought at 50 cents. Then I bought more at 43 cents, averaged down because I was fairly positive this company was going to go higher. And then it did go higher, doubled in price from 43 cents, my second buy-in. And then I decided to sell out at a profit. So this is actually an occasion where when I sold out, actually did work because then the share price slipped back to 66 cents. Now again, my psychological barrier buying back in when the share price goes lower. So I sold out 6,327 units because the share price is low. Maybe I should buy back in, especially if I'm bullish about this future of this company, but I'm just so resistant for some reason. One thing I've got to get over. So anyway, I'm fairly confident this company is going to go forward. We're seeing revenue growing, operating cash flow is going to grow, profit's going to grow. This company has some good potential for the future, and they're in the right sector. They're in the defense sector, so everything's good for this company. So Breville is another interesting example of a company that I was thinking of buying at the height of the COVID-19 panic. I went down to $10 and I just saw the share price one day and I went, I should buy that. And I didn't buy it. So then the share price just went through the roof. Now, the reason I bought this was because of the TV show Billions. So who watches Billions? If you don't watch Billions, I do recommend that TV show. Had how many seasons? 5 seasons now, or something like that. Anyway, I really like that show. And there was one episode where Kate Sacker, she was the assistant to the Attorney General or something for New York. She's the African woman. The actress who plays her is the daughter of Claire Huxtable from The Cosby Show, if you remember her, the mother. So she's actually the daughter of the mother of Claire Huxtable's, I forget her name. Anyway, Kate Sacker's father in the show came to visit her. And then he gave her a present, and the present was a Breville something or other. I forget what it was exactly. And he just said, it's a Breville. And she just went, wow, it's a Breville. Not sure if the company paid for the name to be dropped in the TV show, or if Breville has just become a thing around the world where it's a Breville and your eyes just light up. It's one of those, brands that people just love. So if it is one of those situations where it's a brand that people love, the potential for this company is enormous moving forward, because this is an Australian company and it is quite pricey at these prices, but I just thought it was name dropped in the TV show. It's sort of like if Estee Lauder or something. What's those bags? Those really famous bags. Anyway, it's like it has potential to become like that in the future. So anyway, I haven't really thought about Breville, that it's something that's highly thought of, but potentially it is, and that's why I bought in, because of Billions, the TV show. Base Resources. This is actually an interesting company, because I bought into this company because they decided to issue a dividend at a very high dividend yield, which had me thinking. So I bought in a fair bit, 22,000 units at 26.5 cents, which is a big holding. I've meaning to cut that back to 11,000 units, just because I bought probably too much. I'm not even sure why I bought so much, simply because it is a small capped mining company, and they do have potential projects. I think it was in Madagascar, and they do have to spend a little bit of money to get those projects going, but they are operating cash flow positive, that sort of thing. So I did a video on Base Resources. One of my first videos was on Base Resources. But anyway, I can't complain. The share price is higher, so I've got capital growth and I've got dividends, very high dividends they gave out. So I'm not that upset at all with Base Resources. Enviro Swede. Now, this is another company where I held for a very short period of time when it was like less than 10 cents. I sold for a very small profit and the share price just went through the roof. So I just decided I'm just going to buy it 21.5 cents and hold. I don't care what happens with the share price going forward, because I like what this company is doing. I'm a fan of what they're doing, and I think they have a lot of potential for growth in the future, because where they're situated, that's going to be a really highly sought after sort of area or field or sector. So that's the main reason I bought. I don't care what the share price is doing recently, because I think the potential for growth in this for this company is very high. Nitro is just in the right space. SAS, just bought them because they were SAS and growing. That's the simple reason I bought Nitro. TPC Consolidate is not a company I recommend to anyone. It's a very highly liquid company. So highly liquid just means not much is traded on a daily basis. Liquidity has increased over the last, say, 4 or 5 months since I bought them. So I bought them at 95 cents. They had a really good report, and the share price just rocketed up to about $1.60, and then there was very little liquidity, very little selling, and the share price is still $1.40. They did an 8 cents dividend. I think that's another reason why the share price grew quite quickly. Very low market cap. They're in the retail electricity sector, so because I think wholesale electricity or energy was fairly low, they were getting some good profits out of that. Anyway, I don't recommend that company to anyone, just simply because they're highly liquid. If the liquidity increases, more than likely you're going to see a share price increase quite quickly, and that would mean it's a good time to buy, just because liquidity is increasing. Mcs Security. Okay, so this is an interesting story. I've held this company for a long, long time. In fact, 6 or 7 years. I bought into the mining company that they did a backdoor listing into. So a backdoor listing is you've got like a shell of a mining company or sub company, and there's this other company who wants to buy sort of the shell, and that's a backdoor listing. That's sort of like an IPO, a good way to just get into the ASX. And Mcs Security, that's how they got into the ASX, a backdoor listing. When I saw the announcement, I saw security and I went, oh, internet security, they're in the right space, awesome, this is going to do really well. And then I read the announcement and it was security guards or personal security, that sort of thing. I went, what? It's not very sexy. And the thing is, it's not very sexy at all. Not sexy at all. I sold out quite quickly just because not sexy, again, not sexy at all. Very low margins, that sort of thing. But then I bought back in at 2.3 cents. The share price went down a fair bit. Market cap was ridiculously low, like $2 million. They were still cash flow positive, very small profits. And I thought any sort of growth here, the share price is going to go through the roof. And it's gone through the roof in the last month or so. So it's gone from 2.3 cents to 4.5 cents. A lot of volatility. Wouldn't be surprised to see the share price go back on the day I'm doing this video. The share price yesterday went up 25% in one day. No news. Just shows you have volatility in this company. So a lot of potential for growth in this company if management do the right things. So I don't know. It's a weird company, very low market cap again. So it's sort of more of a punt because of low valuation, that sort of thing. Just like TPC. Alexium, I've already talked about Alexium. Share price went up to 10 cents the other day. I did a video on that, and it's now drifted back to 6.4 cents because there's been a lot of selling. A lot of really stale shareholders still have holdings within this company. Alexium share price went up to over $1 a few years ago, and then it's drifted all the way back to 6 cents. And a lot of those old stale shareholders still have holdings within Alexium. And all you have to do is go to hot copper forums, and you just see that negative sentiment, that that spite around Alexium still is within the holders of the company. And what has to happen for the share price to go forward for Alexium is those stale shareholders have to sell out, because we're starting to get new shareholders coming in, more upbeat shareholders. And once the upbeat, more positive shareholders take hold, become more powerful than those stale shareholders, that's when the share price can move forward. And that might take a while, because those stale negative shareholders, they're fairly powerful right now. Peninsula Energy, I did a video on uranium and why I'm, well, not why I'm bullish, but Peninsula or uranium went through a bit of a growth spurt in share prices the other day. So I'm very bullish around uranium for the future. I think just demand supply side of the commodity cycle. So uranium, just like any other commodity, goes through cycles. We've been at the bottom of the cycle for a while. Looks like it's starting to turn to the positive, and that's when you want to buy. When it starts to turn to the positive, that's when you want to buy into a commodity stock. And Peninsula Energy is sort of in the right area. They have a project in Wyoming that can go into production fairly quickly, and everything's bullish everything's a lot of tailwinds with Peninsula Energy, so I'm fairly bullish. And the market sort of agrees with me over the last few months, because the share price has gone from 6.9 cents to 11 cents. They did a really dilutive capital raising about 7 months ago, but it looks like all those shareholders that were negative about that capital raising have left the building already. Mesoblast is another company. It's just like Avz Minerals. Mesoblast and Avz Minerals, the next two companies here, have been two companies I've been trading a lot. So with Mesoblast, like I buy at $1, sell at $1.20, buy at $2, sell at $2.20. And I just thought at $4, I'll just buy and hold, because I think this company has massive potential for growth moving forward. Now, just the potential. There is also the potential this share price could drop all the way to 40 cents or so. But I think there is that potential. They're in the right area. I like what they do. It's going to be positive for humanity, that sort of thing. So decided just to put a small holding and just maintain that holding. No more trading with Mesoblast. Unless I see the share price go to like $1, then I'll put in another, maybe a trading, do some trading around that sort of share price anyway. But anyway, Avz Minerals, this wasn't a really good trading stock for a while. So the share price would go like 10 cents, then drop to 6 cents. 10 cents, drop to 6 cents. And I was just trading that, buying at 5 cents or 6 cents, and selling when it got to between 9 and 10 cents. Seems like between 9 and 10 cents was a really solid, powerful area of resistance. But then around last time I got to 9 cents, I just thought this has the potential to actually go through 10 cents. And it has that potential right now. It's around about 10 cents. It's holding firm. So in the previous times when it's fallen away from 10 cents, it was quite quickly, but it's holding firm around 10 cents. This company has a lithium project in the Democratic Republic of Congo. It's one of the, if not the largest resource of lithium in the world, but they have to spend a lot of money, something like $600 million to get that project online and feasible. So the fact that it's in the Democratic Republic of Congo, although I believe the government of Congo the Democratic Republic of Congo has a bit of a stake in AVZ, which means they would want this to get rolling. But the fact that they have to spend a lot of money to get this project into play, but the fact that it is the largest, one of the largest AVZ, or one of the largest lithium resources in the world, has me excited. I thought I'd just buy into it. I'm not the biggest fan of lithium, but I could be wrong. Whisper, that's just in the right sector, you know, SaaS company. That's all I'm going to say about Whisper. It's gone back a little bit from when I bought it, but that's okay. In it for the long term. Amber Technology, they are a very small cap company, have a fair bit of revenue, and they did an announcement a month or so ago, and the share price went up something like 100% in one day because they were profitable, good cash flow, and very low market cap. So I decided to wait for the share price to drift from about 26 cents. As soon as it hit 20 cents, I just bought in, and just going to see what happens in the future. It's not the sexiest company, but there is potential this could grow a fair bit. Zenith Minerals, yeah, this is a company, I'm not sure why I bought into it. It might belong more in my momentum sentiment portfolio. They've been doing a fair bit of announcements, so it's an exploring company, mineral exploring company. Fair bit of announcements recently, and it's fairly bullish announcements, but every time we have an announcement, we see a bit of selling, which is not the best. But anyway, Zenith, one of my lowest conviction holdings in this, so it's probably one of the companies I might sell out. But again, if I do sell out, I'll probably regret it moving forward, because in a year's time, it'll probably be $1.45 instead of 14.5 cents. That's another company that I sold out. Kidman Resources, I bought at 10 cents. Then they they were gold miner or gold explorer. They found lithium at the right point in time. The share price just went through the roof. Funny enough, they maintained that gold exploring. They'd probably be still, they bought out by Wesfarmers. Their share price probably would have gone through the roof just because they were in gold. They went to lithium. Lithium went through the doldrums. If they remained in gold, they would have been seeing a massive uplift in their share price. But that's a whole different video. So I'm rambling a little bit there. Orbital Uav, so it's unmanned aerial vehicles. Just go take a drink. It's not alcoholic. So this is a company where I regretted selling half of my holdings at 95 cents. So I bought at 47.5. Thought it was like being very smart, selling half at 95 cents, take profits, free carry, and the share price has kept on going up. So enough said about Orbital. Fairly bullish about that company, and the market sort of agrees with me at this point in time. Impellis, it used to be called Mobile Embrace. Share price went up to 40 cents. They were cash flow positive, profitable, and whatever they were doing, I forget what they were doing, but it became very unfashionable. I think they had relationships with Telstra, Vodafone, and Telstra, Vodafone said no more. We don't want whatever you're doing. We don't like what you're doing, and Mobile Embrace share price just dropped like a rock. I decided to buy it. That's not 6 cents. That's 0.6 cents. So this is less than 1 cent stock. I just bought $1,000 worth of stock because it's very low market cap. They do have like $9 million in revenue, have a little bit of debt. They're very close to being cash flow positive. If they become cash flow positive continually, I think that share price will go up, but very low confidence. That's why I bought in just a small stake, only $1,000 worth. So that's all I'm going to say about Impellis. I'm not very confident. It's an ongoing company. I do like the chairman. I forget his name, BB. I know his initials BB. I really like he's very honest about the state of the company. He tells it as it is. I really like that honesty, and that's another reason I actually bought into the company, just because he is the chairman or CEO or something. He provides actually loans to the company, so he has a bit of a stake with the company. So he wants the company to succeed. Connection, this is a bad buy on my part. FOMO got the hold of me on one quarter's results. I bought at 2.6 cents, and then the share price has dropped to 1.6. Cash flow positive, they are profitable, a low market cap. So I don't know, I'm just going to keep on holding this. No reason, the story hasn't changed, no reason to sell. Just FOMO just got the better of me in this occasion. Genetic signatures, I just like the fact they do test kits. I think that's a future growth area. So I bought in at $1.99, and we've seen the share price come back a bit. But again, this is a long-term hold, so I don't really care that share price has dropped. Mitchell Services, they're in the right field. They do drilling. Now, I call this one of the cheapest stocks on the ASX at the moment, because based off their growth, potential for growth, and their market cap, the operating cash flow they got, it's very, very cheap. I think this has potential to be a 10-bagger and still be cheap. That's how cheap it is at the moment. And then in the right sector, drilling is going to increase over the next few years. A lot of mining companies will be drilling. We're going to go through a commodity boom in the next 5 years. This is my opinion. And there's going to be a lot of drilling. So we've seen a bit of a mining services lull over the last 5 to 6 years. I think that lull's turning, and Mitchell services are in the right sector. Share price has drifted back since when I bought them at 58.5 cents. If it drifts back anymore, I'm going to buy more because this growth of this company is phenomenal. I've done a few videos on Mitchell Services. Have a look for those because I do tell you why. It's cheap as hell. Can I say hell? Yeah. Hey, Mitch, hell. So anyway. Estrella Resources. This is probably one of the weirdest trades of my life. So I bought 20,000 units at 10 cents and the next day it went up to 23 cents. Sold half at 23 cents to free carry. So I'm free carrying Estrella Resources at the moment, 10,000 units, not much. This company can do anything it wants because I free carry. I don't care. No matter what happens to Estrella, I've made a profit out of the company. It can go to $10, all I care. I think they're in nickel, and they can make the most significant nickel discovery in humanity's history. And that's going to be great. So at the moment, they could go to $100 or go to $0. I've made my profit. I don't care. And that's the benefit of free carrying. I'm not the biggest free carrying fan, but that's one of the benefits of free carrying is you lose that emotional detachment to a company. And with Estrella Resources, I've done that. I don't have an emotional detachment with this company at all, so I can do whatever it wants. Pointera. Now, this is an example of benefits of doing YouTube videos because I start to research companies which I probably wouldn't have researched if I wasn't doing these videos. So I saw a lot of people were very interested in Pointera, so I decided to do a video on them. I did a little bit of research, and the more research I did on Pointera, the more I liked them. And then I saw the share price drift back to 34 cents. I went, let's go buy some at 34 cents. And then the share price has gone through the roof since then, thanks to Motley Fool recommendation. So go Pointera, a lot of potential with Pointera. Dynamic Drill and Blast, you can see I did a quarterly cash flow report video on this company. It's a new IPO, hasn't been listed on the ASX for very long. Again, they're in drill and blasting, so they're in the right sector. Really good quarterly report, so I just decided to buy in because they're in the right sector, good growth potential for the future. Flexi Group have changed the name to Hum. That's why I bought into this company. Simple as that. The theory was as soon as people realize they can buy Hum, they'll start buying. They didn't realize that Flexi Group was Hum. Share price did turn around for a while. It's gone back a little bit, but if buy now, pay later is real, Hum share price should go through the roof over the next 2 years or so. And then the last two companies were mistakes, different reasons. VTI, Visionary Technologies. The mistake here wasn't the company itself, was buying at 4 cents and being a little bit too impatient with buying. Share price has drifted back to 3 cents. I do think this company, I like what this company does, and I think this company has potential for growth moving forward. And the last company is Essentia. This was a mistake. Plain and simple, I thought this company was turning around, so I thought I'd buy it at 22.5 cents, sort of the turnaround story, and the share price has almost halved since then. This is a company, someone I knew once called this company the best company on the ASX. How wrong that was. It's just been one disaster after another with Essentia, profits going backwards, cash flow going backwards, everything's going backwards with these companies. And it just keeps on going backwards. The latest bad news was some sort of, they were hacked into, and because they were hacked into, they're going to lose a lot of profits because of that. So this is just one disaster after another. And I'll potentially set out this company because, look, my loss of this company is only 50%, so it's no big deal. And some people are like, oh my God, 50% loss. But you'll see some of my gains when I show you my portfolio. 50% is nothing, so it's not much. It's something like $1,000. So who cares? So what I might do either essentially is just to wait to see what happens in the next few reports, and then if nothing really improves, I'll sell out. So that's my strategy with Essentia potentially. Now, I've had a lot of holdings in the past and a lot of regrets. So realestate.com, Nanosonics, Altium, Resonance Health, EML, or Nearmaps, 5G networks. So a lot of these companies I do regret selling. So I probably sold out too quickly. Realestate.com I held from 2013 to 2020, and that sold out in February this year when I changed super funds. I didn't buy back in. When I moved my holdings from my old super fund to my new super fund, I could have transferred, and I had a choice which companies to transfer. And Realestate.com, Nanosonics, Altium were three companies and Ramsey Healthcare were three companies or four companies I decided not to transfer for some reason or not. I really like Nanosonics, really like Altium, really like real estate, although real estate's really highly valued right now. It's probably overpriced. Ramsey Healthcare really has done nothing with share price, so that's could have been an example of not a bad example. But anyway, there's companies I might consider rebuying again. Again, that psychological barrier of buying into companies you've sold out. And some of these other companies like Nearmap, Resonance Health, definitely those two I sold out way too quick. I sold Nearmap because I had a very small profit, something like 40 or 50 cents, I forget exactly what. Then the share price went through the roof. Resonance Health, I sold at like 3 cents, and the share price last time I looked was 21 cents. Remain patient. So these are some of the holdings in the past I've had and have sold out completely now. And I haven't mentioned some of my dog stocks. So dog stocks are these horrible companies that aren't doing anything. Suda, that's a sort of a spray, like a drug spray. I thought that had a lot of potential. Nothing's happened with that company, and then I sold out for a significant loss with that. OBJ, they're not called OBJ anymore, so don't look that up. They changed the name to something like Wellness and Being. So in about 2014, 15, they had an agreement with Procter & Gamble, which sounded amazing. They had an agreement with Procter & Gamble, but all the benefits went to Procter & Gamble with that agreement, and OBJ share price just plummeted. So many other examples of dog stocks I've owned, which I haven't listed here. This is the current performance of my portfolio. So you can see when I talk about, if you go to all the way to the bottom, you get IST, which is Essentia. I've only lost $1,000 out of that buy, but then you can see all my gains up the top there. So 25,000 A2 Milk, 9,000, almost 10,000 with AVA, Bitcan 4,000, a lot of 1,000s, 2,000s throughout littered there. So my biggest losses have been 1,000 with Connection and Essentia 1.1. So even though I've lost 46.67% in Essentia, it's not much of a loss. So pretty good performance out of this portfolio over this period of time since I've held this. And so this actually, this is up to date. This is from the close of trading on the Wednesday, the 9th of December. All my performance in this video was based off the previous day's performance. So this is up to date. Now what I'm going to do from this weekend is I'm going to have a clean slate. So with A2 Milk, my profit and loss will be 0. Ava Risk Group, profit loss will be 0. And even Essentia, my profit loss will be 0. So I'm going to start profit loss for all companies at 0% and then track my performance from this weekend every week. So I'm going to do a video every week tracking the performance of this portfolio, and then I'll just mention any changes I've made to the holding. So what I'm sort of doing is, for all intents and purposes, bought all these companies at the close of trade on Friday, and then I'm going to track the performance from then on in. That's sort of what I'm doing, if you can understand that. So that's going to be exciting. I'm going to do a video a week on this, just like I'm doing with my momentum sentiment portfolio. So I'm fairly excited about these video series because I'm going to learn a fair bit, and it's just really going to be transparent to you viewers who are watching this video series. So that's all I've got on this video. Hope you've enjoyed it. So it's been a fairly long video, potentially my longest video I've ever done. And if you do need professional advice, I'm not a professional advisor, so if you do need any advice, make sure you seek out a professional advisor who is qualified and who can speak to your own financial needs and questions. Otherwise, that's all for today's video. Have a good day and speak to you later. Bye.